Hey everyone, it's Chris from Smithy Finance. Welcome back to my channel. So today is part 3 of my continuing series on secrets of the stock market. Veteran pro trader reveals all. That's me. I've got 41 years in the game, 85,000 hours. I've been trading from home for 25 years with no clients, no other income. This is how I make my living. And I've learned a few things over the years. Parts 1 and 2 went through some of the first lessons that I brought to bear. And this is part 3, and I'll go over a few more items. So number 9 is press releases. Now every company will have a press release every quarter for their earnings. They'll also have periodic releases of significant events in the company's ongoing business. Maybe it's a big contract, maybe it's a mining company and they've been drilling holes looking for zinc or gold or whatever, and they'll have some assay results. So it's really important that you read these releases and read all of them. And I'm going to tell you that sometimes when you're reading it, you won't quite understand it because it's in the jargon of its business and you're not knowledgeable enough. Even I'm not knowledgeable enough of all these things. But you've got to read it, and you will glean certain things from the press release, regardless of your level of proficiency in that industry. And the thing to be aware of is that every press release is the same. The first paragraph is always good news. It's always optimistic. We're proud to present our earnings for the fourth quarter. We've accomplished this, this, and this, and we're doing these things which are great, and blah, 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 blah. The bad news, if there is any, is buried. It's going to be in the fourth paragraph, the fifth paragraph. So you can't stop here. You've got to go, you've got to read the whole thing, and you've got to read it with a critical eye, not with rose-colored glasses. You're going to have confirmation bias if you own the stock. You want to see good news, but you have to take that view out of it and just read it for what it is. That bad news will be buried. A lot of people will not go down far enough, so you get an edge by reading the whole thing. So very, very important. So you got to read all of it, even the mining results, which will be in jargon that you don't know. Read it anyway. Eventually, you'll learn. The bad news is buried, which I mentioned, and the outlook on an earnings release. It's always the outlook, the future prognostications of the company that are the most important. Again, the outlook is buried. It's not that they're trying to hide it, but the outlook typically comes towards the end after they've talked about what happened last quarter. Then there'll be an outlook for the next quarter. So again, read all of it. Number 10, take pilot positions. And this means if there's a stock that you like, maybe they just came out with a good press release, or an analyst that you like has put out a strong buy on the stock, take a pilot position. That just means a small position. So if you might own 1,000 shares of a stock, you buy 200 and then see how the stock reacts. I've always found that if you put all your money in it right away and it goes down, the next day or for the next week, you can get shaken out of it really easily. But if you buy this pilot position and it goes down and you kind of go, why is it going down? And maybe you'll redouble your efforts and have another read through the press release. And you might decide, hey, you know what? I think this is a good company. It's down, it shouldn't be down, or I don't think it'll stay down. And then you can add another 200. So now you own 2/5 of your position. And that's how we kind of build positions. So take a pilot position, a small position. It will sharpen your view on the company. I have a watch list, and I've got lots of stocks on the watch list. I also own lots of stocks, quite a few of them with small positions. But when I have a small position in a stock, I watch it closer than if it's just on my watch list, because I actually have money in it. So take a pilot position, a small position, and build it from there. When everything aligns, go heavy. Okay, this is really important. So you've taken your pilot position and you're reading about the company. You've added a few more shares here and there, and maybe the stock is starting to trend higher, and you're liking what you're hearing. You're seeing press releases. Another release comes out of a positive drill hole or a new contract. Market looks positive in general. Everything is aligning. Okay, now is the time to go heavy. Okay, so when you own stocks, 15, 20 stocks, and you own 3% of each one or 4% of each one, and one of them doubles, it's not going to make a huge difference in your portfolio. But if the one that doubles, you have 25% of your money in, and it doubles, now we're talking. You got 33% in it, and it doubles, now we're talking. So I'm very heavy Bitcoin, and it took me time. It took me a long time to really get my head wrapped around it. But once I did, I went in much heavier. And this is how it is. Now, I own a lot of oil stocks, which I like. I own a lot of gold stocks, or at least some gold stocks, some copper stocks, and I really like them, but the stocks aren't acting well. So I'm staying with a small position. And as I'm hopeful over the next months or quarters, even years, I will add to the positions as these companies start to make progress and are worthy of adding. Okay, the companies have to prove it to you, but you can't be shy either. When something is going your way, when you have discovered a company, you've been following it for a while, and it all aligns, you got to dig in. This spreading out of your assets equally over 30 or 40 positions is not going to get you rich. There has to be a concentration, at least to a certain degree, at least 20%, I would say, when everything aligns. Okay, number 12, when bad news comes out. So we've read the press release. Down here, they've drilled a dry hole. Maybe it's an oil stock, and they're in Kuwait or they're in Argentina or somewhere, and they've drilled a bad hole. And there was a lot of expectation on that hole. If that bad news comes out, you've got to get smaller. If that was your reason for owning the stock and the news is bad, you've got to either sell all of it or at least some of it. And generally, if the news is unequivocally bad and you know it, and the stock looks like it's going to open 15% lower, 20% lower, it's painful. But I'm telling you, you should sell it all on the open, because there are institutions out there that also see that bad news. And these institutions, they might own 10 million shares and you have 2,000 shares. Well, they can't sell that 10 million on the open, but they might sell 500,000 on the open. And then they are going to hit it for the next 3 weeks to get out of their position, or the next 6 trading sessions. And that stock is going to go lower. So look, we always used to say your first loss is your best loss. That's a maxim of the traders, and it really makes sense. If you dither and you're shy about it, or you're thinking, well, if it rallies just a bit, I'll sell it, you're going to lose more than if you just sell it all on the opening. As painful as it is, you can't think about the money. You've got to think about doing the right trade, the proper professional use of your knowledge, and being decisive. Okay, so when the bad news is truly bad, you've got to sell now. If the news is bad, but it's because of a delay, maybe I own Aya Silver and Gold, for example, and they've had been a little slow getting their mine up to speed. One thing or another, mining's very tough. Anyway, the stock has been punished for it, and that is just a temporary negative. I'm confident that they will be able to get that mine fully up to speed. Fully up to speed means it might take 1 quarter, 2 quarters, 3 quarters, but this is more or less a temporary situation. That's different. Okay, I'm not going to sell all into it. I might get a little smaller because it's going to be dead money for a while, but no way I'm blowing it all out. I'm more likely to be buying. This is the game, guys. Like, there's no one rule that is going to be for every stock. You have to be flexible and knowledgeable enough of your positions. So again, read the entire press release, be decisive, and there's always a chance to win your money back in that stock or another stock down the road. Lastly, don't give up. Okay, so I've had some wicked losses and some wicked times in my life where I've lost big money in a quarter, in a day or a week or a month or a year. And you just can't give up, because there will be winning stocks down the road, even if you've gone into a dry spell or a bad spell and you've made lots of mistakes and you've been unlucky and the market's just been really bad. Something in general, a plane flying into a building, for example, nothing you can do about it. But you don't give up. There will be other opportunities. There's always opportunities. There's always hope, right? Hope is a great word. In the stock market, in life in general, hope is a great word and a great emotion. There is always hope. There's always something else. So if things go south on you, don't give up, but you've got to learn. You've got to remember these lessons, write it down in your notebook, and don't make the same mistake again in the future. So I've got lots more points. This is part 3. I know in here it says part 1 of 4, but this is part 3 today. And there's going to be more than 4 parts. It might be 6 or 7 or 8. I'll do one of these once a week, as well as my midday daily updates. So thanks for watching. Please like or subscribe. I'm just getting the channel off the ground. I'd appreciate that. And I will see you in the next one.